So when a stock like Critical Metals, that's ticker CRML, just rockets, 80% in pre-market, you really have to ask, is this a mining company? Or is it suddenly some kind of geopolitical chess piece? Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today we're digging into Critical Metals, CRML, based on data we pulled this morning, October 6th, 2025.
Yeah, and the timing is pretty interesting. The whole macro picture is, well, favorable right now.
Favorable how?
Well, you've got futures looking green, industrial metals are surging, mostly down to tight supply, maybe a weaker dollar too. It sets a, pretty positive stage for miners in general.
Got it. So there's a tailwind. Okay, our mission today, using our research, is basically to figure out this conflict, right? Are we betting on this potentially world-changing story, or should we be running for the hills, looking at the frankly kind of ugly balance sheet? Let's start with the story. CRML, they're all about lithium, rare earths. The secret sauce in all the new tech.
Right, the stuff you need for EVs, wind turbines, defense tech, everything. And the catalyst, the big news.
Yeah, the blockbuster news.
Is that the U.S. government is thinking about putting money directly into the company, specifically to lock down the Tanbreeze project. That's in Greenland.
Tanbreeze, okay, remind me, that's the big one.
It's one of the world's largest known rare earth deposits. So securing that, it's massive from a strategic standpoint, reduces dependence on, other countries, especially for processing. And it became even more critical just recently when the company managed to consolidate its ownership. They now hold, 92.5% of the project.
92.5%. Okay, so they basically control it. That's huge potential. But like we said, that potential clashes pretty hard with the past performance. The books look rough.
Rough is putting it mildly. If you run a standard fair value analysis, just based on the earnings, it actually spits out a negative value. Negative $8.12 per share.
Negative $8. Wow. Okay, how does that even happen compared to the, $7.98 close yesterday, and now it's way higher pre-market?
Well, it happens because the earnings are negative. The company's losing money burning cash, which, look, it's pretty typical for an exploration company before they start generating revenue.
Right, pre-revenue stage.
Yeah.
But negative $8. That sounds alarming.
It sounds alarming, but here's the thing, and this is crucial for you listening. Does that calculation even matter right now?
Because of the government news.
Exactly. The potential for U.S. government backing, that's like a paradigm shift. It introduces what you might call strategic option value. It basically means, for now at least, those historical financials, almost irrelevant. The geopolitical story is completely overwhelming the traditional numbers. Financial gravity is sort of suspended.
Okay, financial gravity suspended. I like that. So fundamentals are on the back burner. What's the crowd thinking? Let's look at sentiment. Options market. Our research shows options traders, some pretty bullish. The put-to-call ratio is down at 0.64.
Yeah, 0.64. That tells you significantly more calls. Bets on the price going up are being bought compared to puts. People are wagering on upside. The $10 call seems like a popular bet.
Betting on $10, but they're skeptics too, right? The short interest.
Oh yeah, big-time skeptics. A hefty chunk, something like 17% of the float, is sold short. That's a lot of people betting against the stock.
17%, that's definitely a wall of worry.
It is, but it's also potential rocket fuel. If this price keeps surging, those shorts have to buy back shares to cover their positions, and that buying just pushes the price even higher. Classic short squeeze potential.
Right, the squeeze. Okay, so sentiment is mixed, leaning bullish maybe, but with serious skepticism baked in. What about the charts, technicals? Our read is overwhelmingly positive. Long-term trend, short-term trend, volume accumulation, and it all looks strong. Green lights flashing.
The charts do look very strong, definitely confirming the momentum. But, and this is a big but, that momentum is pushing it way up. It's getting into a technical analysts call overbought territory.
Overbought, meaning it's gone up too far too fast.
Pretty much. It makes the stock really vulnerable to a sharp pullback, even a temporary one. And volatility. It's just shot through the roof. This is really a trade purely on that government news catalyst right now.
Okay, so pulling it all together, this massive government catalyst versus, terrible past financials, bullish options, but huge short interest, strong charts, but now overbought. Our research points towards what? A cautiously bullish outlook.
That's fair. Cautiously bullish. The cautious part comes from those risks we just laid out. The fundamentals are objectively bad on paper, it's technically overbought, and that short interest is lurking. But the bullish part is driven entirely by that potential government backing. It's such a potential game changer, it overrides everything else for now.
So for you listening, what's the key level? When does this bullish story fall apart?
The line in the sand, I think, has to be around that recent price action. Let's call it $10. If the stock breaks firmly below $10 and stays there, that would be a pretty strong signal that the market's faith in this government catalyst is fading, that the news pop didn't hold.
Right. Below $10, the narrative might be breaking. So, critical metals, it really is a high-stakes gamble, isn't it? You're betting on national security interests and the future, definitely not the past performance.
Absolutely. Government backing is the ultimate trump card here. But even rocket ships, they eventually have to deal with financial gravity.
Indeed they do. Okay, that's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next deep dive.